Webull stock, trading under the ticker symbol Bull, had a rough Tuesday session, dropping more than 13% intraday before recovering slightly into the close. After a high-flying July that saw gains north of 35%, Tuesday's pullback felt like a reality check for some, but also an expected breather for others who've been tracking the stock's rapid momentum. Today, we're breaking down what happened, what might have caused the drop, and why the outlook remains cautiously optimistic heading into Wednesday's pre-market. So let's start with the big picture. Webull opened Tuesday at around $15.25. It had shown signs of holding a higher range after last week's rally, where we saw the stock shoot past $18. But by midday Tuesday, sellers stepped in hard. There was a wave of profit-taking, likely triggered by the stock's recent run-up combined with a broader risk-off mood in the fintech and speculative tech space. Now, was there a specific news event tied to the drop? Not exactly, but there were some whispers online and in a few finance forums about potential regulatory scrutiny building around Webull. Specifically, concerns resurfaced about the company's historical ties to China and how US customer data might be handled. It's worth emphasizing, though, that these were rumors, not confirmed developments. There were no official announcements from the SEC, no press release from the company, and no concrete regulatory filings related to new investigations or actions. Still, in today's market, especially with politically sensitive sectors like fintech and crypto, even whispers can be enough to trigger volatility. Also keep in mind, Webull has been preparing to reintroduce crypto trading in the US via its Webull Pay platform. That news helped drive much of the bullish momentum earlier this month. But any delay or regulatory snag in that rollout could spook traders, even if temporarily. So while nothing official has been said, the market may be reacting preemptively to the idea that the company's ambitious plans could face hurdles. Despite the sell-off, the fundamental case for Webull remains intact. The company recently posted its first profitable quarter, with $12.9 million in net income. Revenue is growing strongly, user numbers are up, and it now manages more than $12 billion in assets across 24 million users. They also locked in a $1 billion standby equity deal to fund future growth. That's a solid war chest to lean on. So what does this mean heading into Wednesday's trade? Well, pre-market indicators are still forming, but traders are going to be watching for several things. First, whether the $15 level holds as psychological and technical support. That area had previously served as a breakout zone earlier in July, and it would be constructive if buyers step in to defend that line. Second, volume is going to matter. If we see low volume selling in the early hours, that could suggest the worst of the profit-taking is over. On the other hand, if high volume selling continues, it may point to a shift in sentiment that could pressure the stock lower toward the $13 range, which is the next key support level. Third, and maybe most important, is whether we get any clarification from Webull themselves. A press release, social media statement, or any communication addressing their crypto rollout or regulatory posture could help stabilize the narrative and refocus investor attention on growth. That kind of corporate communication is often overlooked in these moments, but it can make a major difference in a stock's short-term price action. Options flow is another thing worth mentioning. Over the past week, there has been an uptick in bullish call activity, especially in the $17 to $20 strike range. That suggests that at least some traders are betting on a rebound rather than a prolonged sell-off. Of course, options aren't a perfect predictor, but they do provide clues about where money is flowing and where traders think the stock could go next. Now, what should long-term investors do in the face of this pullback? If you believe in Webull's story, that it's building out a serious challenger platform in the fintech and crypto space, then Tuesday's dip could be a buying opportunity rather than a red flag. But if you're in this as a momentum trade, you'll want to keep a close eye on those technical levels and be ready to adjust your thesis if the trend continues downward. To wrap up, Webull is facing a moment of volatility, no doubt about it. But the move on Tuesday wasn't driven by collapsing fundamentals. It was more about investor psychology, fear of the unknown, and a little bit of rumor-induced stress. The company still has a strong balance sheet, exciting growth plans, and a loyal user base. If the market can stabilize, and especially if the company comes forward with more updates, there's reason to believe that this is just a shakeout, not the end of the run. That's your pre-market update for Webull stock heading into Wednesday. Stay tuned, stay smart, and as always, keep your eye on the price action and the news flow. It could be an interesting day ahead.